Alexandra Mers, a bullish on Tesla and investment expert, has stated that she believes the stock may be worth $300. If you have been keeping up with Tesla, you are undoubtedly aware that at the end of 2022, the stock had dropped to nearly 100. Fortunately, Tesla's stock has resumed its upward trajectory and is currently trading near $200. However, given the company's remarkable growth potential, if you're a long-term investor in Tesla, you likely want more. If you identify with this, make sure to follow this video through to the very end, as Alexander Mers reveals how Tesla's stock may be worth more than it now is. Hi everyone, and happy return to Tesla for tomorrow. Last year, Tesla experienced a horrible bear market that caused its stock to plummet and lose more than 60% of its value. The bear market emerged as a result of delays to Tesla's Chinese manufacturing, growing competition, and effects of global economic slowdowns on demand. In addition, Tesla experienced problems with rising car costs, product delays, and concerns around Elon Musk's takeover of Twitter. Other EV firms also had to deal with pervasive negative conditions in the automobile industry, so Tesla was not alone. But things do appear to be improving, as Tesla's stock has begun to rise once more. According to Mers, the stock has already increased by 50% in little than a month in 2023, and investors are expecting it to keep going in this direction. She believes that the value of Tesla stock exceeds its current price and that a recovery will occur soon. How will this come about? See what happens when you keep watching, but before we get started, please make sure to hit the like button, subscribe to our channel, and enable alerts so you can be informed about anything that happens with Tesla. Due in large part to the advantages of its price reductions, Mers remarked that she thinks Tesla has a good chance of controlling the electric vehicle industry. Demand for Tesla vehicles increased significantly as a result of the company's recent price reductions on some EV models. In just 3 days following the price reduction, the carmaker received almost 300,000 requests for its vehicles. Announced were the cuts. Following a string of price reductions in Asia, Tesla slashed prices throughout the US, Europe, the Middle East, and Africa in what observers perceived as a direct attack on legacy automakers, who are rapidly increasing the production of electric vehicles, as well as small imports that might have been losing money, according to Mers. These costs, in addition to increasing demand for Tesla vehicles, price reductions will force other EV manufacturers to follow suit in order to keep market share. In the largest single EV market, competitors will be under more pressure to follow suit. Startups like Rivian and Lucid, which struggle with exorbitant raw material and production costs and produce far fewer vehicles than Tesla, which sold more than 1.3 million last year, may not be able to afford lower prices. Both companies have also failed to turn a profit since they began operations. Together, they supplied more than 24,000 automobiles last year, and according to Mers, the cost of manufacturing each car was higher than its selling price. Unlike most of its competitors, Tesla's lack of appealing product lines and the state of their auto financing business could pose challenges for some of its rivals, including Ford and GM. Tesla makes money from a variety of sources. The Model 3, Model Y, Model S, and Model X are Tesla's 4 electric vehicle models. Additionally, it has unveiled the Cybertruck, the new Tesla Roadster, and the Tesla Semi, 3 specialized electric cars intended for consumer use that are predicted to generate enormous profits when they are eventually introduced. The carmaker also intends to keep utilizing advancements in other technologies and its fully exclusive self-driving battery cell. Tesla is making money from energy storage and regulatory incentives in addition to EVs. By producing electric vehicles, EVs, rather than gas-powered vehicles, Tesla is able to obtain regulatory emissions credits. Gas automakers like GM, Ford, or Volkswagen can purchase these credits directly from Tesla when they are unable to meet the country's low or zero-emission production criteria. According to Mers, there may come a moment when Tesla cars compete not just with EVs but also with gasoline-powered automobiles, since, given their pricing and amenities, purchasing a Tesla will be a far superior option. The majority of cars on the road are predicted to be electric in the near future, as sales of traditional vehicles are already declining. The International Energy Agency predicts that by 2030, EVs would account for more than 60% of all automobile sales worldwide, taking into account other amazing items that are about to hit the market in addition to Tesla's pricing power, which is a significant competitive advantage. Alexandra Mers, pointing out a clear disparity between value and price, thinks Tesla's shares would be worth about $300. NERS is a huge supporter of Tesla and thinks that investors will profit handsomely from the company's shares in the foreseeable future. Recently, a bull and influencer started a petition to support an expeditious buyback of the company's shares. According to NERs, this would enable Tesla to profit from its presently low stock price. A buyback of Tesla stock, in her opinion, would demonstrate confidence in the company's future. Performance and benefit shareholders. Additionally, NERs has requested that Tesla be upgraded to investment grade by the New York-based credit savings organization Moody's. She said that because cost reductions are made on a daily basis, Tesla's ongoing innovations will enable the automaker to maintain larger profit margins. NERs continued, "The automakers are getting better. This production capability is represented by the financial figures that are released on a quarterly basis." According to NERs, Tesla adopts the same model strategy as Apple, which presently holds the highest investment grade. The four former Moody's analysts compared Tesla to Apple and claimed that Tesla generates significantly more profit in the EV car industry than Apple does in the phone business. NERs thinks Tesla can contend with the fierce competition in the electric vehicle market. She went on to say that the carmaker doesn't need to worry about the competition because it is at the forefront of innovative production. If its rivals don't come up with more innovative ideas, Tesla could end up holding its position for a very long time as the largest automaker in the sector. According to analysts, Tesla's top aims include increasing production as quickly as feasible, cutting the cost of manufacturing, and gaining autonomy through its FSD software. According to reports, Tesla has submitted its environmental application for the expansion, confirming that it aims to ramp up from the current 500,000 vehicles per year to 1 million vehicles per year in the future. The car company is already approved for a production capacity of 500,000 vehicles per year at its Gigafactory in Berlin. The automaker revealed that while the application for partial approval, which has been filed to the relevant state office for the environment, primarily pertains to modifications to the current plant, it also serves to increase production on the factory grounds since the plant's production facilities must be set up there after it begins production in late 2021. Fortunately, things are starting to change as Tesla recently confirmed that the factory has managed to continue to ramp to 4,000 vehicles per week, indicating that the automaker will soon hit its goal of 5,000 units per week at the Gigafactory. Originally, Tesla planned to manufacture 5,000 units per week at the Gigafactory by the end of 2022, but it was unable to achieve this due to a global supply chain crisis. Instead, Tesla announced that it finished the year with a respectable production rate of 3,000 Model Y vehicles per week. Tesla's New Mexico factory is a significant step towards producing its electric vehicles at a reduced cost. Musk claims that plans have been made out to deploy efficient technologies in managing operations from production to servicing, as well as to decrease assembly costs in half for upcoming generations of Tesla cars. Tesla's goal is to hasten the global switch to sustainable energy, and what sets it apart from other businesses is that it is doing it by leveraging its engineering know-how and emphasizing user experience. Tesla is the automaker most suited to guide global mobility towards genuine autonomy. What do you think about MERS's assessment of Tesla's stock price? If you're interested in learning what Tesla has been up to these last few days, please let us know in the comments area. Click on the following video that appears on your screen. I'll see you soon.